Welcome to my YouTube channel, Accounting with Francisco. So today we are going to continue the first lesson in your grade 10 textbook, that is background of business. So this is the part 4 video of the lesson number 1 in the grade 10 textbook. So today we are going to discuss about the stakeholders of a business. So now here you can see a picture. So there are different kind of stakeholders. There are different kind of stakeholders. So you have the government and community, employees, as well as future investors, customers, owners, managers. We have suppliers, and we have competitors, lenders. So here you can see different type of stakeholders in this picture. Now we are going to analyze in deep who are the stakeholders. So here, stakeholder of a business. The different parties interested in business activities are called the stakeholders. Different parties interested in business activities are called stakeholders. They are interested due to various reasons in the business. So these stakeholders are interested due to various reasons in the business. So as an example, in the previous picture, we had this owner. So owner is interested in the business because he has a reason. So the reason is owner is interested in having a sufficient profit. Even as an example, in your small village shop, so in that the owner wants to make profit at the end of the day. So that's why he is interested in the business. And here it says, and the business has some objectives to be fulfilled from them as well. So let's say there is a small business. In that business, there are some employees. Let's say there are some cleaning staff. So what the business expect from them? Business expect that they are doing the work properly. They are cleaning the whole business properly. So stakeholders also has interest on business, and business also has interest on stakeholders. So if I take that employee example, so I said to you now, business, how we can say that this let's say it is some kind of it is some clothing shop. So in that clothing shop, the business wants that this cleaning staff will clean the business properly. So that's the way that the business has objective to be fulfilled from these employees. As well as employees also are interested in the business due to various reasons. So employees are not going to clean the business free of charge. No, they are expecting something. They expect a salary. So that is the way how these stakeholders, these employees are interested in various reasons in the business. So I took only one example, but we have different type of stakeholders. So let's analyze all the stakeholders one by one. Owner, a single person or a group of persons who provide resources to the business are called as owners. So it can be either a single person or a group of persons who provide some resource to a business. So let's see what an owner is expecting. Owner is expecting to earn enough profits and security of the investment. So owner is bringing some money to the business. So he needs security for that investment and growth of the business in the future. So owner wants to grow and develop the business in the future at the end of the day. So those are the expectation of our owner. Next one, managers. The people who conduct operations, make decisions and implement them on behalf of the owner called as manager. So what managers are doing is they are making and implementing decisions, but on behalf of the owner. So On behalf of the owner only, managers are going to take decisions. And in large scale business, many number of managers are appointed for different departments, such as marketing manager, finance manager, human resource manager, and also you can say IT manager, research and development manager, and also operations manager. So like that, there can be different type of managers in a large scale business. But in a sole proprietorship, that means in a business where there is only one owner, so this sole proprietorship, those lessons will come in the future. Um, so simply sole proprietorship means a business where there is only one owner. So in those kind of business, the owner and manager are the same. Owner and manager are the same. So expectation of a manager taking decision to achieve business objectives and implementing those decisions, promotion and job satisfaction. So let's say the manager is taking a decision on behalf of the owner to increase the sales of the company. So he should implement that also. He should tell the ways to reach that target, how to take that decision. And also managers expect promotion. They want to go to a higher position in the future in the job. And also job satisfaction must be there. Employees, individual performing the operation of a business are known as employees. So I explained about employees earlier also. So the expectation of the employer receiving a fair wage or salary and job security. So employees want to receive some salary, fair salary, and they need job security. So there should not be accidents in the workplace. And if we take this COVID-19 issue, so this job security is very important, right? So the businesses should at least provide free face masks for the employee and put some sanitizer at the entrance. So like that, job security is important, especially during this COVID-19 situation as well. And the next one, customers. Customers are the person who buy goods and service. So as an example, you might have experience this. You are going to a shop and buying, let's say, a data card. So you are the customer. You are the customer, the person who buys goods and service from a business. They can buy these goods either with the reselling motive or with the motive to use or non-consumption. So what is mean by reselling motive? So let's say there is a person who is purchasing, let's say, 200 kilo of rice. So he is purchasing them and selling them to another person. So that's called reselling motive. Reselling motive. What is mean by motive to use for own consumption? So let's say a person called A is going to a shop, buying 1 kilo of rice, coming home and cooking it and eating. So that is called motive to use for non-consumption. So what are the expectation of a customer? Obtaining products at reasonable price. So for example, if you go to a shop and they say that the price of let's say soap, the price of soap is 1,000 rupees. Will you purchase that soap? Let's say a small like sunlight, it is 1,000 rupees. No one will purchase sunlight, no. So remember, customers expect that they must obtain products at a reasonable price and also obtain quality products. They want quality products. Suppliers. Suppliers are the providers of raw material transport facilities to a business. So let's say how suppliers what expect securing orders continuously. So suppliers. So let's say there is a person called B. He is conducting a business where he is selling biscuits. So what happened? He needs a supply. Supply should go and provide business to that, provide biscuits to that business. No. So what happens? Suppliers expect securing orders continuously. So that suppliers wants that these biscuits are ordered continuously and obtain money without any delay. So suppliers expect that they are getting the payment on time. Financial institution. Financial institution are the institution providing required loans, consultancy service to a business. So let's see how financial institution are expecting, what financial institution are expecting from business. Collecting loans and advances given. So financial institutions are providing loans, but they also want to collect them. They provide loans, that's true. They also want to collect them. So that are they are expected. So no one is going to give loans free of charge. Competitors. Competitors are other businesses producing or selling similar goods and services to a business in operation, like Pepsi and Coca-Cola. So they are competitors. They are producing the same good. They are producing the same good. So they are in a competition. Competitor expect determine the price of own products and to face competition. So competitor can decide their own price and they want to face this competition. They want to win the market. So let's say there is Pepsi and Coca-Cola. Coca-Cola wants to face competition. They want to remove Pepsi from the market. So what happens? They are going, let's say Coca-Cola will reduce the price. So they are doing something like that and they face competition. So remember these 2 points. Government. The government propagates policies required to achieve economic growth of a country. So that means government make policies to achieve the economic growth of a country. So they want to increase the jobs of people and production and all those. So government expects that collecting taxes due. So government wants to collect the tax on time and also generate employment opportunity. They want to give new jobs to people and increasing the domestic production. Community includes the population living outside of the business in the society. For example, journalists, environmentalists, and pressure groups. So those parties come under community. So they expect whether the business activities are conducted in an environmental friendly manner. So there should not be pollution and trees should not be cut. So that's what community expect. And also analyzing whether business contributes to social welfare. So thank you for watching my video. Please subscribe to this video and like it. So let's meet with another video very soon. The next topic will be the unit 2 in your grade 10 textbook. So thank you for watching this video. Have a nice day.